Mathieu. Such a pleasure to be here. Thank you for inviting me. Thank you to National Bank and Bloomberg.
It's great to have you. TC Transcontinental is the largest printing business in Canada. You actually print the Globe and Mail, the Toronto Star, and wait for it, the National Post. So pretty much every major newspaper business in Canada. But you did a pivot in the past few years, and we talked about that. You're in packaging now. And the company is listed on the Toronto Stock Exchange with a market cap of 1.5 billion Canadian dollars. Isabelle, as a Quebec-based journalist, I know your company, but tell us your story, because it's a family story also, but tell us your story over the past decades, and stop at 2014. You'll understand why.
Perfect. So Transcontinental is a second-generation family-controlled business. It's publicly listed on the TSX. It was founded by my father in 1976, so 49 years ago. Our origins are in printing, and we are still the largest printer in Canada today, and have a sector that's evolved, actually, so not traditional printing. In the years 2000, we were the largest community newspaper publishers in Canada and the largest women's magazine publisher. As we saw advertising declining, we decided to sell that business. It was a right timing for us to exit that business, and the multiples back then were still very attractive. We sold our media sector at a price that today we could not get. 2005, we had huge cash flows from our printing business and decided to invest in digital. That did not last long. We failed fast. We exited, and we're faced with the decision of very strong cash flows from a printing business. So either continue run the business or reinvest those strong cash flows in a new business. So 2010, we had a decision to make, and we decided to invest into packaging. So I'm stopping here, Mathieu, as per your instructions.
So it's interesting because you weren't printing mainly, and then you decide to pivot to say, hey, we need some kind of new business model here. What triggered that? Because you feel that printing was going to fail you at one point over time?
So printing back then was declining, although it was still producing very strong cash flows. And as a public company, you're condemned to grow. So we looked at the packaging sector as a way for us to continue growing our business. Today, packaging represents 57% of our revenue and is $1.2 billion of revenues for Transcontinental.
So your company has a dual-class ownership structure, and your family controls the company, the Marcoux family. Was it more difficult or easier to do this pivot with this structure?
I would say it was easier. There's a perception that family-controlled businesses are slow, are emotional, are indecisive. It's actually not my experience at Transcontinental. We do look for the long term. We do look to create long-term value. However, we've been able to take decisions very quickly and act swiftly. I'm also on the board of George Weston that owns Loblaws. Same experience. You see what Loblaws done, acquiring Shoppers Drug Mart, acquiring real estate. They've expanded. They took decision quickly. They seized opportunities. I was on the board of Rogers. The Shaw acquisition was a milestone. I'm on the board of Power Corporation of Canada. Same long-term view, but swift decision-making. So I actually think family-controlled businesses can balance the long-term and the short-term quite effectively.
I guess that during this pivot, there were some challenges. What were the lessons learned there during this transformation? From a governance perspective.
So good governance has been very important for us. Lessons learned, surround yourself at the board level with great people, people from different backgrounds, from different experience. Gender diversity has been very important at our board. So we have a board that's independent. 8 board members, over 11 are independent. The 3 others are myself and my 2 siblings. We have 5 women out of 11 on the TC board. We have board members that have a variety of backgrounds, whether it be manufacturing, finance, retail, marketing. We also have a lead director that acts as a link between myself as executive chair, my family members, the other independent board members. So really good governance, bringing decision-making that is astute, fast, and quick.
I want to learn more about family-controlled businesses because we have a few in Quebec. Power Corporation is top of mind, controlled by the Dimmer family. What are the benefits of those family-controlled companies overall?
I think the benefits are alignment. So families in business are completely aligned with shareholders to the extent that they work to create value over the long term, but also in the short term. The benefits also have been demonstrated by National Bank. So it's not just me saying that. They have what they call their annual Family Advantage Report. And they show that family-controlled businesses in Canada actually have superior returns. It's 700 billion in market cap that family businesses represent in Canada. It's 1 million Canadian that work for family business. So it's really a cornerstone of our economy in Canada.
In terms of governance, though, many shareholders, and I've talked to shareholders in New York, they have concerns about family-controlled businesses in Quebec. You have advisory firms like ISS and Glass Lewis advising against voting for family board members. Don't you agree that there could be some conflict of interest sometimes where a family board will not necessarily act in the shareholders' interest, but their own interest? And we can see it in M&A sometimes, where you have a company that doesn't want to sell because they want to keep the business in the family.
So a few things on that. I think, as I said, I think family businesses are aligned with shareholders because they seek to create value. Families in business, however, need to have legitimacy to control the business. And legitimacy, to me, stands with credibility. You have to be credible to run the business and hence legitimate. So going back to the board, it's so important to have a strong board, a board that's independent, a board where the voices of board members are heard and listened to. And that's certainly been my experience at TC Transcontinental, where we have a credible board, we're legitimate to run the business, and we deliver results.
Let's go back to Transcontinental. Where do you see value in packaging going forward? Talk to us about what you do in packaging more precisely, and where do you see value there? It's plastic packaging, right?
So it's plastic. So plastic has been demonized. People don't like plastic. However, the benefits of plastic are often underestimated. If you think about plastic, it's light, it's small. If you think about the cost of transporting plastic, it's very low. If you think about the benefits of plastic in terms of shelf life, it's unbeatable. So 80% of our business is packaging food. We package cheese, we package meat, we package coffee, tobacco. There's nothing like plastic to extend the shelf life of these products. So there are great benefits to plastic. Now, come with plastic is recyclability. Plastic needs to be recycled, and that's the challenge. So how we've tackled this challenge is really investing heavily in research and development. We have a team that's second to none. We've opened a facility last month in Spartanburg where we have a film that is fully recyclable, and really we're going to the market with that film with success. So I would say two words: sustainability, recyclability, and the benefits of plastic.
So plastic or packaging is more promising here than printing somehow.
I would say we have two strong sectors. Yeah. In packaging, we're able to serve our clients with great products. In printing, we've really also pivot that business, focusing on the retail sector. We've been out in the market with a new product that's called Radar. So we were traditionally a printer of flyers. Canada is a flyer country. People love deals, and they look to the flyers for the best weekly deals. We launched 2 years ago this product, which is called Radar, which is a compilation of flyers serving large retailers. So we distribute today 5 million copies of that product weekly in Quebec, the Atlantic provinces, and British Columbia. So serving the retailers to help them bring their customer in the store. In printing, we also do in-store management. So once customers are in the store, they need to have a great experience. In-store marketing is about display into the store. So for us, it's a very synergetic. It's the same client base. So we serve Metro, Loblaws, Shoppers Drug Mart, Canadian Tire with flyers and in-store management. So in print, again, we've pivoted, and we see a lot of opportunities to continue growing in in-store marketing. We started from scratch, from zero. Today, it's a bit less. Less than 300 million. So.
But it's interesting because in printing, we should not only think about printing like newspapers. You can also print like cardboards in shops and like
absolutely
many avenues there that will remain despite.
Yeah, that's actually growing.
Yeah, exactly.
Because retailers wants to have the customers that they bring in the store. They want them to have a great experience.
Most of your packaging business is in the U.S., right?
So we have 26 plants in packaging, 16 in the U.S., 5 in Latin America, 3 in Canada, 1 in the U.K., and 1 in New Zealand.
And most of the revenues, about 60%, comes from packaging.
Absolutely. So packaging for us, we entered packaging in 2014 because you had me stopped at that date. Why we chose packaging, we were pretty good at printing on paper. We felt we could print on plastic. We were pretty good at serving large customers in Canada, and that's what we do in packaging. We do serve large customers, Coca-Cola, Mars, P&G. That's the profile of our customers. We were pretty good at managing a network of plant in Canada. That's what we do now in the U.S. and Latin America mostly. And we chose packaging because it was a sector dominated by some few strategic companies, but also private equity. So there was a room for consolidation. Since 2014, we did 10 acquisitions in packaging, yielding $1.2 billion in revenues.
So most of your revenues are coming from the U.S. Are you more of a U.S. business now than a Canadian business?
We have more revenues coming from the U.S., and we're still very Canadian at heart.
Okay, that's important. I was looking it up on the terminal, and we have the analyst consensus rating, and they are bullish on your stock with a buy recommendation. Your stock price went from $10 a year ago, now it's nearing $18. It's up YTD by 30%. What moved the needle in the past year?
Yeah, so we're very proud about the stock trajectory in the past year. It's been fantastic. I would say the answer is focus. Last year, we put in place a new management team, new CEO, Thomas Morin. I took additional responsibilities, so did our CFO. And we decided to focus on 3 things: profitability, lowering our debt, so cleaning up our balance sheet, and having a higher ROI. So increased profits, cutting SG&A, working on cost of goods sold, and turning around underperforming assets. ROI, obviously stronger cash flows, less CapEx, more ROI, more comparable to our competitors. Cleaning up the balance sheet, that's working on working capital. Selling some real estate, which were no longer of use, and allowing us to put in place a share buyback. So I think the combination of that proved to be very powerful for our last quarter. Were increased year over year, and it's been busy, and it pleased our investors, and we're super happy about the uptick on our share price.
So you did many acquisitions over the past decade to grow in packaging, and you did. Pretty amazing pivot there. Are you on the hunt still for M&A?
So there hasn't been much in the flexible space in the past 2 years. Not many opportunities, not many companies have been for sale. We see a bit more activity right now. We have a balance sheet that will allow us to be a participant in the industry. We see packaging acquisition and also acquisition in ISM. We will also continue to prune our portfolio. We want to be in the higher growth, higher profitable segments in packaging. So those segments that do not correspond to those criteria, we will look to divest. So I would say we'll be active on both fronts.
Okay, and what's your number one priority in all of this?
Our number one priority is to continue increasing our profits.
Okay.
Yeah, we're in a low growth environment. Printing is not growing at a fast pace, neither is packaging. Packaging volumes are slightly up. However, there are pricing pressures, so we're in an environment where we need to continue increasing profitability through programs of continuous improvement, operational excellence, commercial excellence.
Great. Isabelle Marcoux, thank you very much for this great conversation.
Un plaisir. Merci, ça me fait plaisir.
Please welcome to the